a lot of people still think that if they are not living in Dubai, they are non-residents, they cannot get mortgage in Dubai.
Okay.
But that's not the fact. Non-residents get. So tell us what exactly, what do the banks finance if they are non-residents, they are not living here? What do the banks give in finance?
As per the current policy, banks are comfortable lending to non-residents. There are 3 to 4 banks who are very comfortable.
Okay.
They lend up to 60% to a non-resident.
Okay.
There are some banks at times they could do a slight deviation and try for 70 as well.
Okay.
But all that depends on the client profile and case to case basis.
Right.
So there's no standard rule that one can get 50, one can get 60 or one can get 70. It all depends on the client profile, the property value he's looking at, and the loan amount he intends to borrow.
Okay.
That's there for a non-resident.
Right. Now, but for a non-resident,
yeah,
what does the bank actually check? Because they don't have income here, they don't live here.
Correct.
Right. So a lot of people, especially when they're overseas, they ask, how will the bank give me money?
Correct.
So what does the bank ask in terms of documents?
So there are 2 scenarios. Let's say if the client is a salaried client, 1 or 2 banks underwrite them on their salary and their liabilities in their home country. How they underwrite a client in UAE. So if someone's salary is 50,000, they take a 50% DBR, they pull out an AECB report and check his liabilities in the country.
Okay.
Similarly, if they want to underwrite him on his income criteria, we will need his income bank statement, where his salary is coming, his country credit report to see his borrowings, if he has cards and auto loans or mortgages there, and the taxation document to understand what is the exact money he's getting in hand. Because many European countries and other countries have taxation as well.
Yes.
This is the salaried profile. There is self-employed, where they do complete underwriting, which means company documents, company bank statement, company credit report, company audit report, and then they underwrite him as a complete self-employed non-resident.
Right.
Third criteria is lending on a client's balances.
Okay.
There are 2 banks who look at their personal balances in their personal account. It could be a saving, it could be a current account. They don't accept call deposit, they don't accept fixed deposit, they don't accept an investment account.
Okay.
So they purely want to see any given point of time how much is the money he has parked in his personal account, and on that basis they underwrite his eligibility.
That's liquid cash in the account, basically.
Correct.
And I think sometimes we've had some cases, where clients had the money in their company account but not in their personal accounts. Correct. And because of which the banks were not so...
I'll remind you, the flip was, it's very difficult if Amit owns the company, has a personal account and has a company account, then they can still club it because Amit is the sole owner. But if Amit and Tahir are owners, they can't take Amit's eligibility on a company bank statement, because how do we justify how much money is parked in the business from Tahir or Amit?